So, right now, obviously, inflation's the scary part. But I think within 6 to 12 months, the economy is going to slow from what the Fed is doing, and they're going to have to start printing money again. I don't personally interpret or expect a new high in 2022, mainly because.
Welcome to Dream Richer. Why do you think crypto investors lose money? A recent study found that more than 50% of all Bitcoin traders lose money within their first year. As Gareth Soloway explains, the biggest cause behind this is social media. Due to easy internet access and different information on crypto everywhere, newbies are quick to jump on the crypto train without first educating themselves. The basic principle to making money in crypto, or any trade for that matter, is very simple. Buy low, sell high. But Mr. Gareth goes as far as to say that due to widespread social media information on crypto, it has caused the crypto bubble to inflate. This has caused new retail investors with wrong mindset to flood into the space. Hence, they disregard the basic principle by buy high and selling low. Mr. Gareth explains the importance of overcoming fear of missing out. This can cause you to jump in Bitcoin when it's at all-time high. Instead, wait. Because in the words of Soloway, it will always retrace and pull back, hence giving you a much better entry point to enjoy higher gains. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
And remember, there's always another trade, right? If Bitcoin, like for instance, people getting in at 65,000, you didn't have to do that. It always pulls back. Never chase. You'll get in a better spot. I actually think that social media has probably helped inflate the crypto bubble and even the stock bubble to some extent, because you have these, think about it 20, 30 years ago before the internet, and you didn't have places to go where you would get this kind of nonstop barrage of bullish sentiment. Maybe your buddy was talking about it, but that's one or two people in your small circle. With the internet now, it's everywhere. So it means that people are going to get overly greedy even more and follow the suit of buying at highs and really panicking at lows too. So the idea here is, and this is just one of the points, right? You never want to just have one factor, but the idea is, if you take 80% from 69,000, you actually get below 20,000. I think it's close to 10,000 as an ultimate low. So if we go over to this chart now, to me, I'm seeing another potential head and shoulders pattern, right? Here's a neckline right here. Okay. So shoulder, head, and shoulder. All right. And the idea is, again, if you take this high and drop a plumb line down, then what you have to do is, once you break, the ultimate end of this is the same distance, which brings you just sub 20,000, I think around 17,000 to the downside. To me, cryptocurrencies are very similar to the dot-com bubble. And when the dot-com bubble burst, there was a massive sell-off. You had about 95% of them going out of business. Obviously, stocks like Amazon survived, and they've done amazingly well. But you had to have this kind of flush out of all the junk. Think about it as like someone who's sick, right? And your body is basically trying to kill off the junk in your system, but it wants to leave the good stuff. And so essentially you have these cycles with new technologies. Like think about Bitcoin, right? Cryptocurrencies, the blockchain, it's a brand new technology. It's going to change the world, right? We've all said that. We've all heard it. Well, guess what? In 1999 and 98, people said the same thing about the internet. The internet's going to change the world. It's a new technology. It's going to change everything we do. And they were right. But again, it created a bubble and then a massive collapse. And so to me, I personally don't think that 33,000 is enough of a flush out, mainly because Dogecoin still exists. Shiba Inu still exists. There's still, 10,000 different cryptocurrencies. You have to wipe out that junk, and then the best will survive, whether it's Solana, whether it's Bitcoin, whether it's Ethereum. The best will ultimately survive. So you have to have that flush out moment, whether it's in the next year or two, I don't know. But ultimately, I think we've started it with this top. So the idea here is, I don't personally interpret or expect a new high in 2022. Mainly because the past cycles don't agree with that, meaning that if you go back to 2017, it took at least a year for it to bottom out. And then even after it bottomed out, it took a long time for Bitcoin to kind of consolidate, start to move up, and then finally break back to the 2017 highs. I think it took almost 3+ years to get back to that point. So my guess is if you follow that same sort of path, you're looking at 2025 before it really breaks 65,000 and starts making its way towards 100, then maybe 250 and so forth.
Mr. Gareth compares the current crypto situation to the dot-com bubble. The dot-com bubble was the rise of internet. Just like crypto, people placed very ridiculous values on several internet startup companies. Between 1995 and 2000, investors kept pumping money into these internet-based startups in the hopes that these fledgling companies would soon turn a profit. But like with any bubble, they seem attractive at first, only to burst at a later stage. By the early 2000s, the dot-com bubble finally burst, leaving many bankrupt and cause a massive recession because of highly speculative investments in these internet-based businesses. Mr. Gareth argues that crypto could be headed down the same path. The lesson we can all learn from the dot-com bubble is simple. Most companies and business models won't remain viable forever. This is the same case with crypto. Not every coin will survive. Hence, all coins, including Bitcoin, that usually dances around the $30,000 mark, and other altcoins like Ethereum. They should all be invested in with a grain of salt.
But again, Bitcoin to me is the future. It's digital gold. I don't think that the government will ever clamp down on it seriously other than good regulation. So I think there's a long-term future for it. But again, it's just the struggle that I have is just the froth in the system, the charting, those kind of things. In fact, I was on a different show the other day and they were saying, well, when do you think 65% of the US will be invested in Bitcoin? And the answer is not until the next bull cycle, really at earliest. Because people, when its price is going down, that's when they don't want to get in, right? They're going to be shying away. Oh, it's too risky. It's when it makes new all-time highs that they start saying, oh, I got to get in right now type things. So yeah, for me, I mean, there's always a chance you're right and you might be right. What's great about a market is that's what makes a market. You have to have bulls and bears. But yeah, it's hard for me to imagine how Bitcoin could break up significantly until you have the scenarios in place. For instance, the government regulating here in the US, I mean, everyone's talked about how scary that is. I think it's a necessity. Like I've talked to a lot of senior citizens, older people, and they just don't want to go near Bitcoin with the volatility as wild as it is, and with the fact that it's so risky. I even had a scenario where someone jacked my SIM card and got into one of my crypto accounts. Now, luckily, I hadn't funded that particular crypto account, but if I did, they could have gotten my crypto, and there's nothing I could have done about it. No repercussions. There's no FDIC insurance like on a stock account where the government says we're going to guarantee that if someone steals your money, you will get it back. And so there has to be, if you want that mass adoption that can drive Bitcoin to 500,000, there has to be more good quality regulation on these things. So, right now, obviously, inflation's the scary part, but I think within 6 to 12 months, the economy is going to slow from what the Fed is doing, and they're going to have to start printing money again. And my guess is that might, in fact, be the low on Bitcoin. Not that Bitcoin will start to shoot right back up, but don't be surprised if in like September, October, November, December of this year, if we do see the economy to weaken dramatically, the Fed starts printing, and maybe that's where Bitcoin bottoms out for the longer term. The positive side, I want to stress this too, is like if Bitcoin does go down to 20 or 15 or 10, if you still have the same thesis that I do, you're going to get one of the most amazing buying opportunities of your career. Same thing as in Amazon. I mean, I wish going back on Amazon, I bought it when it was $5. I mean, think about the return now with it trading, at 3,000 or as high as 4,000 not too long ago. So the idea is, in bear markets, there's actually great opportunities. And I think that's important for investors to remember. It might stink and suck for the time being, but ultimately, if you're smart about it and you don't let emotion freak you out, which keeps you from buying it at the right levels, you can end up making amazing opportunities that can be life-changing investments. So you just need a plan. So have a plan, right? Let's say you make $5,000 a month. You say, okay, $500 every month will go into Bitcoin. Stick with it, because ultimately we don't know if it will really go down there. And I'm very confident that you're going to 100,000, 500. Maybe it takes years, but I do think there's upside. So for me, probably once it gets below 30, I might say, okay, I'm going to commit, $25,000 at maybe 28,000, maybe another 25 at 24,000, another 25 at 20,000. Then if we get below 20, maybe I'll up it to 50,000 a month, or something like that, or at a price target. And the idea is that, at a certain point, I do want to have some skin in the game just in case it doesn't get down. So don't necessarily rely on me or anyone else to tell you. If you like Bitcoin in the long term, do the smart thing and just buy a little bit every couple months or something. And then your dollar cost average will be low enough if it goes that low, where when it goes up, you'll make a lot of money.
It's clear from Gareth Soloway's explanation that a recession could soon follow in 2022. This is why it's important for all crypto investors and traders to have a strong mindset and not fall into impulse actions when a bear market crash hits. There are 5 main reasons why people lose money in crypto. These apply to both hodlers and short-term traders. Number 1. Taking crypto tips from random strangers. 2. Fear of missing out. Number 3. Going into the market without an entry and exit strategy. Number 4. Taking on leverage without understanding the risk of getting liquidated. And number 5. Buying high and selling low. Do you agree with Gareth Soloway's opinion on a crypto bubble and recession coming soon? To learn more about the latest crypto news, watch these videos here.